Good evening, ladies and gentlemen. On behalf of Bangalore branch of ICI, I welcome each one of you for today's learning session. As usual, Bangalore branch is conducting several programs for the members. Today, we have an important session on direct tax. We are fortunate to have an eminent speaker, CA Naveen Khariwal. May I request our committee member Srinivas to escort the speaker onto the dais. Also welcome him to the flower podium. Ladies and gentlemen, please welcome him. Thank you, Srinivas. I take this opportunity to introduce him to this August gathering. CA Naveen Khariwal has qualification BCom at CA, a practicing chartered accountant, specialized in direct taxes. He comes from a family of chartered accountants. His grandfather, father and brothers all are chartered accountants. He as a speaker spoke several seminars organized by various branches of ICI. To name a few, NIRC of ICI New Delhi, SARC of ICI Chennai, Calcutta DTPA, Bangalore branch of SARC ICI, Ahmedabad branch of WIRC of ICI, Surat branch of WIRC of ICI, Baroda branch of WIRC of ICI, and all the branches of SARC. He also spoke in several other various organizations: Tax Association of Mysore at Mysore, Indian Academy College of Bangalore, SAP Lab Bangalore, Accenture Bangalore, FKCCI Bangalore, Chamber of Commerce and Industry, Hospital, and many other places. His other interests are cricket. He is a green cricketer, having represented college and university matches and played in league registered with Karnataka State Cricket Association and represented in cricket matches organized by Bangalore branch of SARC of ICI versus Income Tax Department, Bangalore, in the last 3 years continuously. He was the captain of the team which won the cricket tournament organized by KSCA along with Bangalore branch of SARC, led the cricket team of Bangalore branch of SARC to national level cricket tournament organized by Pune branch at Pune, Cricket for MET 2015 at Pune. With this brief introduction, please once again welcome CA Naveen Khariwal. Over to you.
Thank Mr. Shetty for this kind introduction. Now 2016 budget amendments, if you see, last 15 years Finance Acts, the maximum number of amendments made in this budget of 2016. Again there were amendments while the bill was being passed by the Lok Sabha. Even in the bill there were around 47 to 48 amendments. Now this budget has been more or less prepared by bureaucrats also, and first time government has listened to them. And if you see here, there are two committees, Justice R. Ishwar Committee and AP Shah Committee. Now various suggestions given by Justice R. Ishwar Committee have been implemented in this budget. So as and how we will go through the amendments, we can have a discussion on the various committees. The first amendment now is about the slab rates unchanged up to 2,50,000 nil, between 2,50,000 to 5 lakhs 10%, 5 lakhs to 10 lakhs 20%, above 10 lakhs 30%. This is in case of an individual resident in India below 60 years and also in case of an HUF. Then individual beyond 60 years and less than 80 years at any time during the previous year up to rupees 3 lakhs nil, 3 lakhs to 5 lakhs 10%, 5 lakhs to 10 lakhs 20%, above 10 lakhs 30%. Then you have a super senior citizen up to 5 lakhs nil, 5 lakhs to 10 lakhs 20%, above 10 lakhs it is 30%. Now surcharge of 15%, earlier 12% to be levied in case of a person's having total income exceeding 1 crore. So now it is 15%, earlier it was 12%. Surcharge continues to remain at 12% for cooperative society firms and local authorities. Now corporate tax rates. Domestic company having total income less than 1 crore, it is 30%. More than 1 crore, less than 10 crore will be 30% plus surcharge of 7%. A domestic company having income in excess of rupees 10 crore, tax rate would be 30% plus surcharge of 12%. Other company having total income is a foreign company other than domestic company. Income is less than 1 crore, it is 40%. Between 1 crore to 10 crores, it is 40% plus surcharge of 2%. And if the foreign company is having an income of more than 10 crores, it is 40% plus surcharge of 5%. You add that 2% plus 3% education cess and second and higher education secondary cess. Now this budget is bringing two rates for the corporates, is brought in 25% and 29%. Now when is a corporate entitled to pay tax at 25%? There are 4 conditions here. A domestic company is set up and registered on or after 1st March 2016. Domestic company is set up and registered on or after 1st of March 2016. Engaged in manufacture and production of any article or thing, and such company income is computed without claiming any depreciation, deduction under section 10AA or chapter 6A or any profit linked or investment linked deduction. And the option is to be exercised before filing the due date of return of income. So these 4 conditions if you satisfy, you can pay tax at 25%. Basically it's telling don't claim any exemptions, don't claim any profit linked deductions and don't claim additional depreciation also. Second rate for corporate is telling at 29%. For that is telling you compare the turnover of financial year 14-15. The turnover for financial year 14-15 should be less than 5 crores. If your turnover of the corporate for financial 14-15 is less than 5 crores, then you can pay tax at 29% for assessment year 17-18. Then firm with flat rate of 30%, surcharge at 12% if net income exceeds 1 crore. So this 115BA what we discussed now, tax incentive of 5% to new domestic manufacturing companies. 115BA, that's what we discussed. Domestic manufacturing company set up and registered on or after 1st of March 2016 to be exercised before the due date under 139(1). You have to forego all this, whole host of incentives you have to forego. Deduction under 10A, additional depreciation 32(1)(2)(a) 20%, deduction on 32AC, investment in new plant and machinery exceeding 100 crores or 25 crores, 32AD for investment in plant and machinery in notified areas of Bihar, Telangana, West Bengal. You have to forego all these deductions and exemptions. Because the finance minister is saying after claiming all these exemption deductions, effective rate to the government is just 21 to 22%, notwithstanding even MAT. So they are telling you don't claim all these exemptions, deductions, profit linked exemptions, investment linked deductions and also depreciation, and you pay tax at 25%. So host of this 33AB for tea development, 35AD for capital expenditure, so on and so forth, you forego all this. Now, Finance Bill 2016, passed by Lok Sabha, provides that benefit of concessional rate tax will also be available to companies engaged in research. It was earlier only for manufacturing, now amendment was made, I told you in the bill itself again. Companies engaged in research in relation to or distribution of article or thing manufactured or produced by it. Now very interesting section 115 WBDA and 1034. 115 WBDA, what about dividend? Now the finance minister wanted to bring all of them on equalization field, for dividend. Say a person who is receiving dividend in excess of 10 lakhs. What is happening? The company who is deducting dividend distribution tax is paying dividend distribution tax 115 or, and after paying tax section 8, dividend declared, distributed or paid, whichever is earlier, section 8, and I am going to declare dividend, pay tax, dividend distribution tax, pay and dividend in the hands of the recipient will be exempt under 10 within bracket 34. So somewhere he felt there was an anomaly, 18.5% is the DDT, and suppose the recipient of dividend is taxed in a higher rate of 30%. Then he says there is a anomaly to the extent there is a benefit to the recipient of 10%. So he has brought this amendment now. So what he says, 115 WBDA inserted to provide that in case of an individual, HUF, or a firm who is a resident in India and they receive any income by way of dividend paid by a domestic company in excess of 10 lakhs, shall be taxable at 10%. Suppose they receive 15 lakhs, is it 15 minus 10 on 5 lakhs 10% or on 15 lakhs 10%? Pardon sir? 5 lakhs or 15 lakhs? 15 lakhs. There was again anomaly, and then the government immediately cleared. The thrust of this government is simplification. They want to simplify anything and everything. This was the confusion. Whether it is on 15 lakhs or 5 lakhs, government immediately came out with the clarification. They say 15 minus 10. On 5 lakhs you pay 10%. And then no deduction will be allowed. Further, no deduction or any expenditure or allowance or set off of loss shall be allowed. Consequently, provisions of 1034 amended. So this is what is 115 DA. 115 BPDA, okay. Yeah, you see the last para, to set at rest the controversy, the amended finance bill, I told you the bill itself is amended again, clarifies that it would be the dividend in excess of 10 lakhs that would be subject to additional tax of 10%. So absolutely no doubt. Here some of us don't have even, investment in shares of 10 lakhs. Where is the question of getting dividend in excess of 10 lakhs? So you take the Ambani family, they may be getting dividend of close to 1,100 crores. They'll have to pay 110 crores as dividend distribution tax. Or the Murthy family, they may be getting around 600 crores. So 60 crores they'll have to pay as dividend distribution tax. So basically, that is what the government is telling. Next, this is one small amendment, change in rate of STT in case the option is not exercised. Yeah.
If the interim dividend is declared before March 2016 and the payment is received after 1st April 2016,
yeah.
So which year it will be taxable?
Dividend declared, paid, or whichever is earlier.
So we have to account for March 2016.
Yeah. So this is one small amendment. Section 98 of Finance Act 2004 provides that the STT on sale of an option in securities where option is not exercised is 0.017% of option premium. Now it is decided to increase the rate from 0.017 to 0.05% from 1st of June. There are more than 31 amendments which have taken effect from 1st of June 2016 itself. Now another interesting section, Chapter 12 EB, newly introduced chapter for tax on accredited income of certain trusts and institutions. Now what do you mean by accredited income? What is accredited income of trust and institutions? Now you have a trust which is registered on 12A. It has got rupees 100 donations, less 15% exempt without spending it, lifetime is exempt, and then 85% need to be spent on objects of the trust. Balance, if you cannot spend it, you can accumulate. 11 to red with 11.5. And the due date is now before the date of filing return of income. You will have to upload it. Audit report, I have to upload Form 10 also. Earlier there was no due date for uploading of Form 10. So Supreme Court held in Hotel Nagpur Owners Association case that the due date for uploading of Form 10 would be before the completion of assessment. Today it is before the due date of filing return of income. In case you are not able to spend 85% and you don't accumulate and file Form 10 electronically, then you shall lose the right to accumulate. Now what is this section? Another draconian provision introduced by the Finance Minister. What it says, what do you mean by accredited income? What is accredited income? He says, look at the assets and liabilities in the balance sheet of the trust. You take all the assets and liabilities of the balance sheet of the trust, assets minus liabilities, fair market value, pay the tax at maximum marginal rate 30%. In case you have violated all these conditions. So simple thing, accredited income is what? He's telling take the fair market value of assets, less liabilities and then pay the tax. A trust, imagine there is a trust running a school or university or college from 40 years and it has throughout claimed exemption under section 1023C or 12 or whatever. It has accumulated huge immovable properties out of the income which is exempt. Out of the exempt income it has accumulated various properties and today, registration is withdrawn to the trust. Imagine they have got the properties worth 100 crores, less liabilities. On 80 crores, for example, 28 crores is the liability. On 80 crores, they have to pay tax at 30% immediately. So this is the draconian problem. Accredited income meaning is clear: assets minus liabilities, fair market value. Now you see when it is applicable. The accredited income of the trust or institution registered in 12A shall be charged to tax when on conversion of trust or institution into a form not eligible for registration under 12A. See now. Genuineness of the trust. There are only two conditions for registration basically. Genuineness of the trust is one of the reasons. Now the CIT, withdraws the registration or does not grant the registration. What do? I have an option to file an appeal before the tribunal. I have an appeal to file an appeal before the tribunal against the order passed under 12AA. What is the time limit for filing an appeal? 60 days before the tribunal. I have time limit for 60 days, but the law is telling within 14 days pay the tax. Within 14 days of the order being passed, cancelling your registration or withdrawing your registration or not granting the registration, within 14 days pay the tax on accredited income, fine. And I have got 60 days time to file appeal before the tribunal. So within 14 days you have to hurry up and file an appeal before the tribunal. Also you have to file a stay. Get a stay also before the tribunal. Because beyond 14 days, they are going to come for collection. Then they may attach your properties also. So you have to file form XC 10D before the tribunal. On every Friday, the petitions are heard for stay in tribunal. So file appeal, immediately file a stay and get it stayed if possible before the tribunal. Otherwise, within 14 days, you have to shell out the tax. So what are the conditions? Either on conversion of the trust or institution into a form not eligible for registration 12A, or on merger with any entity other than an entity which is a trust or institution having objects similar to it and registered 12A. For example, it's taken over by a company which is not registered under 12A. Or on failure to transfer upon dissolution, the trust is dissolved. This is a peculiar case. On failure to transfer upon dissolution all its assets to any other trust or institution registered under 12A or any fund, etc., etc., within a period of 12 months from the end of the month in which dissolution takes place. So this section, my dear friends, applies only for dissolution of the trust. Once a trust is dissolved, what the law is envisaging is within a period of 12 months, you please transfer all your assets to the similar trust having registration under 12A. If you don't do within a period of 12 months, then you will have to pay tax. So only for in case of dissolution of a trust is giving you a time limit of 12 months. Within a period of 12 months from the end of the month in which dissolution takes place. Now a trust or institution shall be deemed to have been converted into a form not eligible for registration 12A if the registration granted in 12A is cancelled, if it has adopted or undertaken modification of its object which do not conform to the condition of registration, and it has not applied for fresh registration under 12A in the said previous year, or application for fresh registration filed under 12A has been rejected. Accreted income shall be amount of aggregate of total assets as reduced by liability as on specified date. Method of valuation is proposed to be prescribed in rules. The asset and liability of the charitable organization which have been transferred to another charitable organization within specified time will be excluded while calculating accreted income. That is in case of a dissolution of a trust. Within a period of 12 months from the end of the month in which trust is dissolved, the trust which is dissolved transfers all its assets and liabilities to a similar trust, then it need not pay tax on its accreted income. Very important, the taxation of accreted income shall be at maximum marginal rate, and such tax is to be paid within 14 days from the date of cancellation of registration order, end of the previous year if not applied for fresh registration, date of rejection of fresh application of registration, date on which the trust got merged with entity not having object required for registration 12AA, date on which the period of 12 months expires in case of dissolution of a trust if it fails to transfer all its assets and liabilities. This levy shall be in addition to any income chargeable to tax in the hands of entity, and this tax shall be final tax for which no credit can be taken by the trust. Same thing, in case of failure of payment of tax within the prescribed time, simple interest at the rate of 1% per month shall be applicable for the period of non-payment. Now, for the purpose of recovery of tax and interest, what can they do? The principal officer or the trustee of the trust or institution shall be deemed to be an assessee in default, and all the provisions related to recovery shall apply. Then, further, the recipients of the assets of the trust, which is not a charitable organization, shall also be liable to be held as assessee in default in case of non-payment of tax and interest. However, the recipient's liability shall be limited to the extent of assets received. So, in case of dissolution of a trust where the dissolved trust transfers the assets and liabilities to the recipient, even the recipient also, the department has the power to recover the taxes if the dissolved trust is not able to pay all the taxes. But the liability will be restricted to the extent of the assets received by the recipient trust. Now, one more important, amendment which the finance minister has made is going to phase out all the deductions and exemptions. All the deductions and exemptions are going to be phased out now. 10AA, you see there, he wants to phase out everything after 1st April 2020. 10AA, special provision in respect of newly established units. No deduction shall be available to the units commencing manufacture or production on or after 1st day of April 2020. Meaning to say 15 years. So April 2020 is the last one, plus 15, 2035. So after 2020 onwards, no question of any 10AA. Next, 35AC expenditure, same thing from assessment year 17-18. You have to bid goodbye. 35 CCD, all weighted deduction. The finance minister say, I can't understand the concept of a weighted deduction. You are debiting 100 rupees in P&L account, you are getting deduction of 150 rupees. So I am going to phase out all the weighted deductions also. 100 rupees now you debit, I allow only 100 rupees. I can't debit 100 rupees in my P&L account, income and expenditure account, you get 150 rupees. So weighted deduction of 150% now shall be restricted to 100% from 1st April 2020. Similarly, 80 IA, 80 IAB, 80 IB, everything is going to go, sir. No deduction shall be available from 1st of April 2017. Similarly, accelerated depreciation, whatever is there 100% he says shall be restricted to only 40% with effect from 1st April 2017, 17, 18 and subsequent years. 35.12 expenditure on scientific research, you know that 175%. That will be restricted to 150% between 17 to 20, and from 21/4/2020 onwards it's only 100%. So gradually is phasing out all the deductions and exemptions. So all this will go. For that matter, on 31st December, Modi will come up on television again with a new scheme. So before leaving for your New Year party, switch on the television, wait. So till income tax is there, you enjoy the income tax. Till income tax is there, we are non-experts in demand. Who knows, income tax will be abolished post 31st December. What will you do? He will tell, I comes on television and he says, I abolish income tax. And I introduce banking cash withdrawal tax. Banks are flush with funds now. I introduce 0.2%. What is the RTGS per day? 65,000 crore per day. That is the RTGS, 2,800 billion. 65,000 transactions, RTGS. So banks are flush with funds. He's always propagating and telling only about paper money. So plastic money. So what Subramaniam Swami and others have discussed with him, you abolish income tax. Next question, Modi says, from where will I get the funds? I will abolish income tax, fine. Where will I get the funds? He says, why do you bother? Coal. That coal blocks, you auction the coal blocks. What is the revenue from income tax per annum? 2 lakh crore. Dr. Swami says, what is the revenue for income tax? It is 2 lakh crore. First you take the coal blocks, auction the coal blocks, you are going to get 11.5 lakhs crores. 5.5 times income tax. 11.5 lakhs crores are going to get. Then he says, you have, what about 1G, 2G, 3G, 4G? So Manmohan Singh was asked by a reporter about 3G, 4G. He told, sorry, I don't know what is 3G, 4G. I only know who is Sonia Ji and Rahul Ji. So what is 1G? What is 1G? Your cordless phone. What is 2G? Your emails, SMSs and messages. What is 3G? I am calling you on my phone, I can see your video on the phone, you can also see my video. What is 4G? 10,000 pages of documents can be sent on that 4G. So all this he says, we are going to auction that. When you auction that, you are going to get how many crores? 5.5 lakhs crores for 4G. 3.5 lakh crores for 3G. So these funds is telling, next 60 years, I need not bother about income tax at all. Next 60 years, I did not bother about income tax, is the proposal there. So they are looking at ways and means. Systematically, he has introduced now 24 lakh Jan Dhan accounts. Systematically, he has brought in everything. Systematically, he brought in first what? Moment he came, first day, in the first week itself, he brought in the SIT, which no PM did since independence. Immediately constituted SIT, moment he assumed office as a PM of this country, within 3 days, he formed the SIT to check black money, which no PM till today has done in independent India. The SIT was formed. Then immediately what happened now? Your PAN transactions. Everywhere, anything and everything, information is there with the departments. Very, very simple now. You need not tell anybody now that you are known by your Aadhaar. Next in the return he told, I want your Aadhaar number. Why in my income tax return you want Aadhaar number? Very simple, everything is connected. Next he says, give me bank accounts, all the bank accounts he says. Give me details of all bank accounts. They collected Aadhaar number, give me details of all bank accounts. Then came your foreign black money UFIA. Then came your IDS. Now has come your Benami provisions from 1st of November now. So Jan Dhan Yojana, for example, Mr. A is going to see you have got 1 lakh rupees in your Jan Dhan account. Before 2 years you had 5,000, 10,000, 2,000. Suddenly you got 1 lakh rupees. Very simple, notice will come cash deposits. That guy is a farmer or a maid servant or a driver or security guard will come running to the department. I don't know sir, it was B who gave me. Come both A and B karke. Both of you please welcome, free boarding and lodging 7 years. 7 years, Benami provision has been introduced already. IDS clearly gave time. Those Benami holders come forward, declare the property, pay tax at 45% on index cost of acquisition, not on the fair market value of properties. And before 30th of September 2017, transfer the property from the original owner, Benami to the original owner. So people did not use that. So IDS is over 64,250 applications. Demand, the revenue was 65,000 crore declared. Today, last day for first installment, 25%. Last day to pay today, 25% for first installment. IDS 3 you have to upload electronically today. If not, the declaration will be null and void. Today is the last day, sir, for first installment. If you have declared and not paid, it will be null and void. Proceedings under Income Tax Act can take place. So after this, gradually he has come up with one more scheme now. We will go through that also. Pradhan Mantri Garib Yojana, Garib Kalyan Yojana. We will go through that also, don't worry. Yesterday it has come. Within 20 minutes, Lok Sabha has passed it. Just 20 minutes. Yes, sir?
But ST3, online reporting, it is asking all the check payments.
No. Only for this month you can pay ID3.
You can upload
100%. 100% you can upload. Only one column will be asked. Only one column. See, 3-4 days back it was not getting saved. Now you can immediately upload. We have uploaded all the forms. So all this, this is one more, Yeah, 32(1)A, extending benefit of initial additional depreciation to 32(1)2A for power sector. So, under the existing provisions of 32(1)2A of the Act, additional depreciation of 20% is allowed in respect of cost of new plant or machinery acquired and installed by certain associates engaged in business of generation and distribution of power. Only generation and distribution of power. What about transmission? So it's saying in order to rationalize the incentive and of power sector, it is decided to amend this section so as to provide that an associate engaged in business of transmission, even a business of transmission of power, shall also be allowed additional depreciation at the rate of 20% of actual cost of new plant or machinery acquired and installed. Amendment to take place from 1780. One more new section introduced, 115 BPF for patents. Very simple section. 10% only will be the royalty. Royalty shall be taxable only at 10%. No deduction shall be allowed. Person resident in India who is the true and first inventor of the invention and whose name is entered on the patent register as patentee in accordance with Patents Act 1970. So, whatever income it derives from royalty in respect of his patent which he has developed shall be charged to tax at a flat rate of just 10%. No deduction would be allowed to him. 80 IAC is PET project of startups, eligible startup section 80 IAC. So new section 80 IAC inserted to provide 100% deduction of profits and gains derived from an eligible business of an eligible startup. Deduction allowable for any 3 consecutive years out of 5 years beginning from the year in which eligible startup is incorporated. So from the immediately within first 5 years, 3 years continuously, you can get a deduction. How much is the quantum of deduction? 100%. But first 3 years, will you get profits, sir? You are giving me, sir, 100% deduction you claim karke. Within first 5 years, for any period of 3 years, you claim 100% deduction I allow. First 3 years, will I get any profits? Has to be seen. Now, what is the criteria for startup? Who can be a startup? At first, it was only company. Then again, in the finance bill, he made an amendment. He made even LLP also a startup. So company or LLP incorporated on or after 1st April 2016 but before 31st of March 2019. Total turnover does not exceed 25 crores in any of the previous years beginning on or after 1st April 2016 and ending on 31st of March 2021. Then the company or LLP should hold a eligible business certificate from the Inter-Ministerial Board of Certification. Very simple. You need not break it. If you get that certificate, you become an eligible, business and you can claim the deduction. It is not formed. The new business is not formed by splitting up or reconstruction of a business already in existence. It is also not formed by transfer to a new business of machinery or plant previously used for any purpose. What do you mean by eligible business? Eligible business means a business which involves innovation, development, deployment or commercialization of new products, processes or services driven by technology or intellectual property. This is the meaning of eligible business is telling. Eligible associates are company and LLP, and meaning of eligible business is what? Basically, it is a process or services driven by technology or intellectual property, and then you will need to get that certificate. Now one more new section there, it's already there, 54E. exemption from 50 lakhs from capital gains if the long-term capital gain is invested in units of specified fund. 54EC is already there, you know that. In case of any long-term capital asset, you derive any long-term capital gain, such long-term capital gain is invested in bonds of NHAI or REC bonds within a period of 6 months. Then up to limit of 50 lakhs you get the deduction. Same section. Only thing is what? Same thing is same 50 lakhs, 6 months, everything is same, excepting that what? Long-term capital gain is invested in units of specified fund. There it is bonds, which may be NHAI or REC. There also same condition. Locking period is 3 years for bonds. Here also locking period is 3 years for the units of the specified fund. 54 GB, yeah. So 54 GB is telling the amendment. What is it? Again, long-term capital gain in respect of gains on account of transfer of a residential property. If such capital gain are invested in subscription of shares of a company, that company should be an eligible startup. Again, it's boosting the investment in startup. So you sell a house property, invest the capital gains in the shares of a startup. Okay? In subscription of shares of a company which qualifies to be a eligible startup, subject to the condition that what? Individual or HUF holds more than 50% of shares of such company, and such company utilizes the amount invested in shares. See, the individual should not only invest at least 50% in such a startup, but he should also see that the company in which he has invested the shares should have invested the share capital to purchase new asset including computers or computer software. Naturally, when the individual is holding more than 50% of share capital, he or she will have control of the company. Therefore, he can very well see to the fact that the company has utilized the share capital for purchase of new assets including computers or computer software. Now 80IB, another interesting section, you decide for yourself whether useful in Bangalore first. This is for profit link deduction for housing projects. Just see whether useful here. 80IBA, gross total income of an assessee includes any profits and gains derived from business of developing and building housing projects. Okay, there shall, subject to the provision of section B, allow a deduction of an amount equal to 100% profits. So this is applicable to business of developing and building housing projects. How much is the quantum, sir? 100% of profits of the business. Let us look at the conditions. What is a housing project first? He is giving the meaning there. What do you mean by a housing project? Housing project shall be a project which fulfills all the following conditions. Point number 1, project should be approved. Fine. Approved by whom? By the competent authority. What is the date? Between 1st day of June 2016 and before 31st of March 2019. So get the housing project approved by the competent authority between 1st of June 2016 till 31st of March 2019. Then, after getting approval from the competent authority, you have to complete the project. What is the limit for completion of the housing project? It is 3 years from the date of approval by the competent authority. Next, if you have got 2 times approval, 3 times approval, project has been approved 2 or 3 times. So which is the date of approval? Because I have the calculated period of 3 years. Where the approval in respect of a housing project is obtained more than once, the project shall be deemed to have been approved on the date on which the building plan of such housing project was first approved by the competent authority. And when shall you say, sir, when the project is completed? Project shall be deemed to have been completed when a certificate of completion of project as a whole. You will have to get a certificate of completion of the project obtained from the competent authority who granted you approval. Next, built-up area of the shops and other commercial establishment included in the housing project does not exceed 3% of the aggregate built-up area. Does not exceed 3% only commercial. Now, what is the plot of land and what is the size of the building project? The project is on a plot of land measuring not less than 1000 square meters, where project is located within the cities of Chennai, Delhi, Calcutta or Bombay. So where the project is located in Chennai, Delhi, Calcutta and Mumbai, minimum area of the project is 1000 meters of plot of land, or if measured radially, 25 kilometers from the municipal limits of these cities. Now we are interested in other places, or 2000 square meters where the project is located in any other place. So Bangalore, it is 2000 square meters. Next, the project is the only housing project on that plot of land. So Bangalore, you have your developer, minimum 2000 square meters. It should be the only project on that plot of land. Built up area of the residential units, sir. What is the built-up area? Does not exceed only 30 square meters where it is in those 4 metropolitan cities, Chennai, Delhi, Calcutta, Mumbai, or within the distance measured area of 25 kilometers from municipal limits of the cities. In Bangalore, 2000 square meters plot. And what is the size of the residential unit? 60 square meters where project is located in easier place. How much is 60 square meters, sir? Around 610 square feet. Around 608, 610 square feet. So how far is it viable? Again, 100% of the profits is exempt. 100% of the profits you get deduction 80 IPA. So Bangalore 2000 square meters and size of the residential unit does not exceed 60 square meters. Where a residential unit in the housing project is allotted to an individual, see the condition, no other residential unit in the housing project shall be allotted to the individual or the spouse or the minor children of such individual. Now, builders are selling the project now, it's only 600 square feet, we will buy 2 houses, 600, 600. So I will take in my name, my wife's name, minor children, is saying not possible. If you have taken in your name, in the name of the individual, you can't purchase a property in name of your wife or minor children. So what? So what? Purchase in name of your mother-in-law, father-in-law, mother, father, then you take a gift at a later date. Because it's clearly telling shall be allotted to the individual or spouse or minor children of such individual. Then the project utilizes not less than 90% of FAR, floor area ratio permissible. Then not less than 80% where project is located in any other place. Because Bombay, Delhi, you know the space problem. Here you can utilize 80%, there you have to utilize 90%. Assessee maintains separate books in respect of each housing project. Then, what do you mean by built-up area? So people, again it goes to Supreme Court, all this, what is built-up area, what is plinth area, what is super built-up area. So it's telling, don't worry, I'll give you the meaning of built-up area also. Built-up area means the inner measurements of residential unit at the floor level, including projections and balconies, as increased by thickness of walls, but does not include the common area shared with other residential units, including any open terrace door share. 60 square meters, no, why confusion? Built-up area is giving the meaning of built-up area itself. Next is telling the meaning of floor area ratio, then even a housing project and residential unit. What do you mean by residential unit? Residential unit, what is the size? 60 square meters. Again, it's giving the meaning of residential unit. Means an independent housing unit with separate facilities for living, cooking, sanitary requirements, distinctly separated from other residential units within the building, which is directly accessible from an outdoor door or through an interior door in the shared hallway and not by walking through the living space of another household. So that meaning also is given. He has drastically reduced the litigation. So that is all about your 80 IPA. 100% of the profits will be allowed as a deduction subject to fulfillment of the conditions mentioned therein. You will have to see whether how it's workable or not. Only 2000 square meters and 60 square meters. Now section 80EE amended to provide first time home buyers. I repeat again, it is only for first time home buyers availing home loans and additional deduction of interest on loan from any financial institution up to rupees 50,000. See, already 2 lakhs is applicable. 1 lakh 50 or 2 lakhs now as is available. So apart from 2 lakhs, you can claim additional 50,000. But you should be a first time home buyer. Value of the house property should be less than 50 lakhs. And loan sanctioned should be between the period of 1/4/2016 to 31st March 2017. And loan should not exceed 35 lakhs. Very simple. So cost of the property should not exceed 50 lakhs. Loan should not exceed 35 lakhs. And it should be sanctioned between 1/4/2016 to 31st March 2017, and then you are going to get an additional deduction of 50,000, meaning to say already 2 lakhs you are eligible, plus 50,000 you are to get additional deduction, incentive for only first time home buyers. Benefit of deduction is extended till the repayment of loan continues. The deduction is over and above the limit of 2 lakhs provided for a self-occupied property under section 24. Now one more interesting section here, 80JJAA. Tax incentive for employment generation. Employment generation incentive on 80JJAA allowing what is the quantum of deduction? 30% of additional employee cost allowable for 3 assessment years to an assessee covered under 4480. Every assessee covered under 4480 can claim this deduction. Deduction available to all employers in respect of cost incurred on employee whose total emoluments are less than 25,000 per month. So applicable to all tax audit cases. The salary or wage per month for an employee should be less than rupees 25,000. Now earlier there was that norms for minimum number of days of employment in a financial year reduced from 300 days to 240 days. Earlier minimum, it was 300 days. Anyway, people are working less nowadays. He has reduced to 240 days. And the condition of 10% increase in employees every year is done away with. Even if there is increase in one employee, you are applicable to claim this deduction. You are eligible to claim this deduction. You need not worry. Earlier it was minimum increase should be 10%. Now even if there is increase in one employee, you need not worry. In the first year of new business, what is a new business? 30% of all emoluments paid or payable to employees shall be allowed as a deduction. And no deduction shall be allowed for cost incurred on those employees for whom the entire contribution under the employees pension scheme is paid by government. Now the sovereign gold bond scheme and rupee denominated bonds. What is that sovereign gold bond scheme? Basically it says it is not a capital asset. So if it is not a capital asset, it is not a transfer. So on redemption of sovereign gold bond, there is no capital gains. Even the interest received will be exempt under 10 within bracket 15. Similarly, even indexation benefit is there on transfer of sovereign gold bonds to all cases of assessees. This is okay. ADGG. So rationalization of limit of deduction allowable in respect of rent paid under ADGG. That 2,000 per month limit is now increased to 5,000 per month. Tax treatment of gold monetization scheme 2015 section 214 and 1015. Same thing is telling amendments 214 to exclude deposit certificate issued under gold monetization scheme 2015 notified by the government from the definition of capital asset and thereby to exempt it from capital gain tax. Also amends 1015 to provide that interest on deposit certificate issued under the scheme shall be exempt. 5627 amendment 87A now. People are thinking there is no change in the tax rates at all. In tax slabs there is no change. Indirectly FM was given under 87A. He has increased it from what? From 2,000 to 5,000, telling that in order to lessen the tax burden on individuals with income not exceeding 5 lakhs, I propose to raise the ceiling of tax rebate under section 87A from 2,000 to 5,000. There are 2 crore taxpayers in this category. 2 crore taxpayers in this category who will get a relief of 3,000 in their tax liability. Applicable from assessment year 1780. So indirectly, the basic exemption limit has increased. Increase in time period for acquisition or construction of self-occupied property. So earlier, what was the limit? What was the time limit? 3 years. So what happened? Justice R. Ishwar committee, always used to go. We used to tell, sir, the builders are not giving possession in time. Why should we suffer? If they do not give within 3 years, you will allow the interest at only 30,000 instead of 1,50,000 or 2 lakhs as the case may be. I am paying my installment, my EMI on time. For the default committed by the builder, why should I suffer? So what we went, Justice R. Ishwar committee said, till the possession is given, you should continue working. The finance minister, no, we can't accept indefinite time period. I will give you 5 years. 3 years I will extend to 5 years. Welcome move. But Justice R. Ishwar committee, told that we want indefinite time period. Until the builder delivers, you will have to give me time period. Because it's not my fault. So in view of the fact that housing projects often take longer time for completion, amend second proviso of clause B of 24 to provide that deduction on account of interest paid on capital borrowed for acquisition or construction of a self-occupied house shall be available if the acquisition or construction is completed within 5 years from the end of financial year in which capital was borrowed. So 3 years increased to 5 years. Earlier it was less than 3 years, people are not bothered. Within 3 years also there is no completion. They are continuing to claim 1,50,000, which is incorrect. In the course of scrutiny assessment, if the assessing officer points out within how many years the property is completed, then if you tell 4 years, 5 years, then they are going to reopen again, allow only 30,000. If you have claimed 1,50,000. Next, this is one another rationalization simplification of 25A. There was 25A, 25AA and 25AB. 25B. What about it? Arrears of rent received or realization of unrealized rent. Now you have received realization of unrealized rent or arrears of rent received. So simple is telling what is it? In the year you received the arrears of rent or in the year in which the unrealized rent is realized, you pay tax. Even if you are not the owner of the house property. Very simple. In the year of receipt of the arrears of rent or in the year in which you recover the unrealized rent, in that year you shall pay tax under that income from house property. you shall continue to pay even if you are not the owner of the house property. It shall be continued to be taxed under the head income from house property, and deduction under 24B of 30% shall be allowed. There is only one section now. Whether arrears are rent, whether unrealized rent is recovered, no problem. Whether you are owner or not, in the year in which you receive, in the year of receipt, please pay the tax. After claiming 30%, this is no problem. From assessment year 1718 onwards. Poem is deferred again. Now 4480, he has brought in some amendments. Now what is it? At present, about 33 lakh small business people avail of this benefit, which frees them from the burden of maintaining detailed books of account and getting audit done. I propose to increase the turnover limit under this scheme to Rs 2 crores, which will bring big relief to large number of associates in the MSME category. So the 2 crores limit is only extended for 4480 only. It is not for 4480. The limit continues to be only 1 crore. Now what is presumptive taxation for professionals? Even professionals we are telling, where is the presumptive taxation professionals? It is there only for businessmen. So then Justice R. Ishwar committee represented that you make it 33 1/3%, sir. He told no. 33 1/3%, no. I will make it 50%. So new section 4480A inserted to provide for estimating the income of an associate engaged in any profession referred in section 44A1 such as legal, medical, engineering, architectural, accountancy, technical consultancy, interior decoration, any other profession as notified by the board. That any other profession notified by the board is, film artist, sportsman, etc. Total receipts should not exceed 50 lakhs, and income shall be estimated at 50% of total gross receipts. So what else you want now? Straight away you are showing 15 lakhs income. You just gross it up 30 lakhs. A doctor can show 30 lakhs straight away. 30 lakhs you show, and just 15 lakhs you need to pay tax. 30 lakhs is your gross receipts. 15 lakhs you pay tax. 15%. You need not book all frivolous expenditure unnecessarily. You want more expenditure, you need not book at all. 50% is telling. 30 lakhs is your gross receipts. Happily pay tax on 15 lakhs. If you come below, if you want to go below that, then anywhere you will have to be subject to tax audit. So don't feel members are thinking in getting apprehended, they are carrying apprehension. Tax audits will be reduced. No chance. Tax audit will not be reduced. Now this one amendment is very important. So we are, again represent this made before the finance minister. Deduction under 30 to 38 deemed to have been allowed. What we are telling, interest and remuneration to partners we used to plan up. We used to take the net profit, calculate the book profits, net profit, arrive at net profit. Then we used to reduce interest to and allow the interest on partners' capital and salary. We used to allow. Now he says nothing doing. 30 to 38 is deemed to be allowed. This interest and the salary is allowed under which section? Under 37 he says. So already you have claimed between 30 to 38 is deemed to be allowed is already mentioned. You are again claiming again. So I will not allow now. So section 30 to 38 is deemed to be allowed. Therefore no interest to partners shall be allowed henceforth. No salary to partners shall be allowed henceforth. Then assessee is not required to maintain books of account and 44A and get the accounts audited on 44AB unless it claims that the profit and gains from profession is lower than the deemed profit, that is 50%. And its income exceeds the maximum amount which is not chargeable to income tax. These are the notified profession what we discussed, film artist, cameraman, director, etc. Now, increase in threshold limit for audit for persons having income from profession. So that 25 lakhs limit has become now 50 lakhs, no problem. Now amendments in 4480. One is 1 crore has become 2 crores turnover. Expenditure in the nature of salary, remuneration, interest paid to partner no longer allowed. 4480 subsection 5 subsection 4. What it says? Where an eligible associate declares profit for any previous year in accordance with provisions of this section and he declares profit for any of the 5 consecutive previous years succeeding such previous year not in accordance with the provision of this section, he shall not be eligible to claim the benefit of provisions of this section for 5 assessment years subsequent to assessment year in which profit has not been declared in accordance with provisions of this section. Meaning to say, 1718 I followed 4480, 1819 4480, 1920 4480. Then my friend came, the client's friend came. What are you doing? Every year you are offering, your turnover is 1.5 crores, you have 1.75 crores. You are offering 8% every year. 8% or more. You can offer even 10%, 20%, whatever. But you should offer more than 8%. So 3 years he opted for 4480. 4th year he says, sorry sir, I can't pay so much tax. My actual profit is only 4%. I will maintain books, I will maintain bills, I will maintain voucher. You do the audit karke. So 4th year he is violated this condition. So 3 years he followed 4480. 4th year he says I can't follow 4480. Therefore I have to do the audit. Moment he violates this condition, he goes out of 4480 for next 5 years. So if he doesn't follow 4480 for a consecutive period of 5 years, next 5 years he cannot follow 4480. That is the, and moment you are out of 4480, what will happen? You are in tax audit. Moment the client is out of 4480, he is in tax audit. And tax audit, how many can you sign, sir? 4480, there is no limit. No limit, it does not come within the limit of 60 audits. That example only 17, 18, 18, 19, 20, 21, etc. In this case, he has not offered income in accordance with provisions of 4480 for 5 consecutive years. After assessment year 17-18, he will not be eligible to claim benefit of AD for next 5 years. That is from 21-22 to 25-26. Then he is also bringing the concept of advance tax. Earlier, presumptive income, no advance tax. Now he is telling you pay only once. By 15th March, you please pay one installment. Eligible assessee shall be required to pay advance tax. He may pay advance tax by 15th March. Now what about this provision for bad and doubtful debts in case of NBFCs? Even NBFCs now you shall be allowed deduction at 5% of gross total income on account of provision for bad and doubtful debts. 32AC 1A, what is it? Investment allowance. 32AC at 15% of actual cost of new asset, where such cost exceeds 25 crores. Is presently allowed to whom? To a manufacturer on what condition? That it should be acquired and installed in the same previous year. It should be acquired and installed in the same previous year. Now you purchase the asset in March. You are installed in April. I need time. So in that case what will happen? I can't claim this deduction at all. So what is telling now? It is decided to provide benefit of this section even if the assets are acquired but not installed in the same previous year. However, the installation may be made by 31st of March 2017. Deduction shall be allowed in the year of installation. No problem. Only the important ones. Now 273A, 273A, 222A, what happened? This time limit for waiver of interest, earlier time period was not there. Now he is telling time period is given now. Within a period of 12 months from the end of the month in which such application is received. So now you are filing a petition for waiver of interest. So for that is telling for that time limit is 12 months from the end of the month in which application is received. Pending application as on 1st of June to be disposed of before 31st of May 2017. So 282.1A1. Now scrutiny, now returns are being filed online. Refunds are issued online. Scrutiny is also done online. So that is what it says. Now from now on, I will even issue the notice under 143.2 also online. So you need not go to the department at all. But all of you know you have to go. Jana to padega hi. You have to go to the department. So he is brought in a definition meaning of hearing. What is meaning of hearing? To include electronic hearing. 223C, he says the term hearing to include communication of data and documents through electronic mode. This is another small section. 43B, one small amendment is made, certain payments made to railways. That is also included. It shall be allowed as deduction only if it is actually paid on or before the due date. Now one more important, set off of losses against deemed undisclosed income 115 BB, not allowed now. 115 BB of the Act inter alia provides that the income relating to section 68, 69, 69A, B, C, D is taxable at flat rate of 30%. Further provides that no deduction in respect of any expenditure or allowances in relation to income referred to said section shall be allowable. Fine. But what about set off of losses? Currently there was uncertainty on the issue of set off of losses against the income referred to in 115 BBE. So now he is telling what? In order to avoid unnecessary litigation, it is decided to amend provisions of subsection 2 of 115 BBE to expressly provide that no set off of any loss shall be allowable in respect of income under these 6 heads: 68, 69, 69A, B, C, D. That was made in the Finance Act itself. Now we will see yesterday what amendment has happened. Taxation of non-compete fees and exclusive rights in case of profession. Okay. Earlier, it was only in case of business. So now non-compete clause is introduced in case of profession also. 28(5)A, you know that whether any sum received or receivable in cash or in kind under an agreement for not carrying out any activity in connection with business is chargeable to tax as business income, no problem. Such a clause, such a section was not there for profession. Now he is bringing an amendment. It is now amended to provide that any sum received or receivable in cash or in kind under an agreement for not carrying out any activity in relation to a profession now shall also be income chargeable to income tax under the head profits and gains of business or profession. Next, further it is also decided to amend the proviso to clarify that receipts for transfer of right to carry on any profession which was earlier chargeable to tax under capital gains would not be taxable as profits and gains of business or profession. Also decided to amend 55 to provide the cost of acquisition, cost of improvement for working out capital gain arising out of transfer of right to carry out any profession shall also be taken as nil. Now, time limit for carry forward and set off of such laws, section 73A. What is section 73A? Laws of specified business under 35 AD. So if you want to carry forward such losses, very simple, you file the return within the due date as specified in 139(3). What about the spectrum fee? Okay, 35 ABP. Now TDS rates are also not much, excepting the payment to contractor 194C. Limit is increased to 75,000. Existing was 75,000. Now it has become 1 lakh. Similarly, life insurance policy, it was 2% TDS. Now it is only 1%. Winning some horses, earlier it was 5,000. Now the limit is increased to 10,000. Commission on brokerage. The existing provision was what, 5,000 and TDS was 10%. Now he has increased it to 15,000 and rate of TDS is also reduced to only 5%. What about from payment of rent? Now he is bringing in form 15G for rent. Earlier no TDS if payment does not exceed 1,80,000. Now he says no TDS even if payment exceeds 1,80,000, provided what? The landlord furnishes to the taxpayer a self-declaration in prescribed form number 15G or 15H. Next, compensation on acquisition of certain immovable property 194LA. Present provision was 2 lakh rupees. Now the limit is extended to 2,50,000. Now what about this in the income in respect of units of investment funds? Rate of TDS was 10%. So now it is telling 10% in case of resident, rates in force in case of non-resident. Yeah, 15G, 15H, we saw that amendment. Now 50C one amendment is made. What is that? Now in 43CA, subsection 3 and subsection 4, there was a clause. There is a date of agreement, date of sale agreement and date of registration. So on the date of registration, if I have received any amount in any mode other than cash on the date of sale agreement, then on the date of registration, I would pay stamp duty on the rate prevailing on the date of sale agreement itself. So such a provision is brought in 50C also to provide that the date of agreement fixing the amount of consideration and the date of registration for transfer of capital asset are not the same, then the value adopted or assessed or assessable by stamp valuation authority on the date of agreement itself may be taken for the purposes of computing full value of consideration. So on the date of agreement, your guideline value was 2 lakh rupees. On the date of sale deed, execution of sale deed is 5 lakh rupees. You can pay stamp duty on the date of sale agreement itself, on the guideline prevailing on the date of sale agreement itself, provided any amount of consideration, not the entire amount. Any amount of such consideration will be received by any mode other than cash. So this was already prevailing in 43CA, clause 3 and clause 4. Similar provision is brought in 50C. Now government withdraws proposal to tax employees provident fund fine now. Now filing of return of income. Now a person has got only capital gains. He has got only long-term capital gain exempt under 1038. So will you file return of income or not? Entire income is exempt. When do you file a return of income under 139(1)? Only when the income exceeds the maximum amount not chargeable to tax, meaning to say it is more than basic exemption limit. You have got only capital gain, say 1 crore. Income is exempt. You will take, don't file a return of income. Finance Minister has made an amendment. 6th proviso of 139(1). Don't tell the client now that you need not file return of income. You have to file return of income. Even if you have got only exempt capital gain 1038, and your actual total income is nil. Your total income may not be nil or it may be positive, but not more than 2,50,000 or 3 lakhs or 5 lakhs as the case may be. But if you have got income under 1038, sixth proviso mandates you to compulsory file return of income, although you may not pay a single rupee, single penny of tax to the government. So be careful, if you don't file, then penalty. Now 139 for belated return. Now what is the time limit for belated return? Belated return time, which the name itself indicates you are filing the return later. Belatedly after the due date. Time limit was 1 year from the end of assessment year or before the completion of assessment, whichever is earlier. So for assessment year 16-17, time limit for filing belated return is from 31st of March 2018. Now he says, he has made an amendment in belated return. He says what? Only up to the end of relevant assessment year. So for 17-18, the time limit for filing belated return is 31st of March 2018 only. It is not 31st March 2019. So remember, earlier time limit for belated return up to assessment year 16-17 is 1 year from the end of assessment year or before the completion of assessment, whichever is earlier. Meaning to say for 16-17, time limit is to file belated return. Valid belated return is up to 31st March 2018. For assessment year 17-18, it is only up to the end of relevant assessment year. It is not 1 year from the end of assessment year. Next, one more amendment he has made, welcome amendment. He says belated return can be revised. Earlier till assessment year 16-17, belated return cannot be revised. Kumar Jagdish Chandra Sinha 220 ITR 167, belated return cannot be revised. Now he says belated return can be revised. So although you have filed a belated return, don't worry, you can also file a valid revised return. What is the time limit for filing a revised return? Yes sir? 1 year from the end of relevant assessment year or before the completion of assessment, whichever is earlier. So subsection 5 of 139 is amended to provide that if any person having furnished return in subsection 1 or under subsection 4, 139.1, if you have filed a return within time, you can revise, no problem. Now 139.4, if you have filed a belated return, it can be subject matter of revision, don't worry at all, welcome amendment. And in any case, if you have filed a return within the time limit specified in notice issued under 142.1, what is the time limit for issue of notice under 142.1? Nowhere given in the Act. There is no time limit prescribed for issue of notice under 142.1. Now you receive 142.1 notice when you receive, normally after the due date is over. For example, after 31st of July or after 30th of September or 31st of October as the case may be, if you have not filed return of income, you will receive a notice under 142.1. Say giving you time 15 days, you file the return of income. Within a period of 15 days, if you have filed return of income, then you can revise such a return. So a return filed under section 139.1, 139.4 or in response to a notice issued under 142.1 within the time limit stated in the notice can be subject matter of revision. Time period for filing a valid revised return is 1 year from the end of assessment year or before the completion of assessment, whichever is earlier. Next, 139.9, one more very welcome amendment is defective return. You can upload a return today without payment of self-assessment tax. It will be treated as not defective anymore. From assessment year 17-18 onwards, you can upload a return just showing payment of self-assessment tax. Last date, you are not able to pay self-assessment tax. No problem. Put it as payable. Upload the return. It shall not be treated as a defective return. Suitable consequences follow. If you upload a return today showing tax as payable, what will happen? Intimation shall be served on the SSC. The time limit for passing intimation is what? 1 year from the end of financial year in which return is filed. Moment intimation comes, what to do? Within a period of 30 days, you have to pay the tax demanded by the intimation, in which you shall be treated as an assessee in default. Moment you are treated as assessee in default, interest leviable under 220 subsection 2, 1% per month or part of a month. That is why even in the 245, no, even if you after you discharge the liability, 220 subsection 2, it comes automatically. Even though no order is passed under 220 subsection 2, by virtue of you having become an assessee in default, because you have not paid the tax within a period of 30 days from the date of receipt of intimation, you become an assessee in default. Interest is payable under 220 subsection 2 at 1% per month or part of a month. Penalty under 221 subsection 1 also is leviable. Quantum of penalty is what? As much as the arrears of tax. So all these things will follow suit. So you need not worry now. Even if you file the return without payment of self-assessment tax, it will not be treated as a defective return. Now many returns I am telling you, ITRB you are not filing, or self-assessment tax you are not filing, or some mistakes are there. Within 15 days, if you don't rectify online, it shall be treated as not having filed return at all. Take a case of case return where you have got 25 lakhs loss. You have happily filed a return of loss within time. You forgotten to send that ITRB to the CBCA, or online there was a defect, online notice came, you forgot to respond within 15 days. And you treat as you never filed the return at all. The loss will be forfeited, sir, 139.3. You cannot carry forward the loss. What losses can be carried forward? Only those which are filed within the time limit specified in 139.3. When I go to 139.3, it says what? The time limit is as mentioned in 139.1. Section 72 business loss, Section 73 speculation loss, Section 74 capital loss, Section 74 capital A loss from owning and maintenance of resources. All these 4 losses, if you want to carry forward for set off in future years, return has to be compulsorily filed within the due date specified in 139.1. 32.2 unabsorbed depreciation, or 71B loss from house property, you need not file the return of income in time. Don't worry. Even if you don't file the return of income in time for loss from house property or unabsorbed depreciation, you can still carry forward the loss for set off in future assessment years. So please take care. Now processing under 143.1, very very interesting amendment in intimation. When can an intimation be passed? All this while, when can an intimation be passed? 143.1. Only in 2 grounds. What is it? First ground, arithmetical accuracy. If there is mistake in calculation of interest, example 234 ABC, or when any refund is due to the assessee, intimation is generated and sent to the assessee. If no intimation is sent, the acknowledgement itself is deemed to be deemed intimation. Don't think that intimation is not there, there is no intimation. Acknowledgement is deemed intimation. Forget that concept now. Intimation can be sent as of today only on 2 grounds. One is arithmetical accuracy, one more is what? Yes sir? Pardon? For example, 24A, section 24A, I claim 40% for repairs. Only 30% is allowed, so intimation will be sent. So in that case also, I have to file a rectification then. Rectification 154 online. Time limit for rectification is how much? What is the time limit for rectification? No time limit. What sir? 4 years. Up to 4 years, the assessing officer has the time limit, and the moment I file a rectification application, within a period of 6 months he has to pass the order. The assessing officer has to pass an order within 6 months, which can be stretched up to 4 years in case of the assessing officer. Now what is telling intimation, 4 circumstances is telling. First one is, suppose you have claimed set off of loss during the year. You have claimed set off of loss during the year, and the assessing officer, moment you file, you set off the losses and file a return, if the year in which you incur the loss, the return was not filed in time, intimation shall be sent today to you. Today, the computer will not allow the set off of loss. You are thinking, the loss is brought out, 8 years time is there, 4 years time is there. Who knows, the department will not know that I filed the return not in time earlier. Now the computer will have to write the date, computer will generate an intimation and it will disallow the loss, but it will issue show cause notice first. It will tell, sir, you have not filed the return within due date, so you are not allowed to be set off this loss. That is the first thing. Next, mismatch in 26 years. If you don't show the income there, if you don't offer the income shown in 26 years in your return of income, immediately show cause notice will come now for you. Before generating the intimation, they will send show cause notice. Sir, this income is appearing in 26 years, you have not offered it to tax. Explain. After sending show cause notice, intimation will be sent adding that income. We'll have to explain. There are ways and means. That is the second scenario. What is the third scenario? Audit report you have not uploaded. ATIE, so many audit reports are required. If you don't upload the audit report in time, the deduction shall be disallowed. Now deduction will not be allowed to you. For example, ATIP 10. For example, ATIA. Form you have to upload 10 CCB. If you don't upload, deduction will not be allowed, sir. He will send one show cause notice again. You have not filed the audit report in time. Audit report not filed anywhere will be, the deduction will not be allowed. Audit report not filed in time. Still it will not be allowed. They will send show cause notice and then they will make a disallowance. Now if you see this, time limits have been reduced. What was the time limit for passing assessment order or ex parte assessment order? Section 143(3) or 144. Regular scrutiny assessment order or ex parte assessment order. What is the time limit for passing order? It was 2 years from the end of assessment year in which income was first assessable. 2 years time limit is now scaled down to 21 months. 24 months is now scaled down, reduced from 24 months to 21 months. Why he says 3 months is for collection of taxes. Earlier my friends would agree, earlier it was 2 years, it became again 21 months, then again they made it 2 years, now from 2 years again they are going back to 21 months. So now the time limit is not 24 months, it is only 21 months. Where is it given time limit? Where is the time limit given for passing of order 143(3) or 144? It is given in 153 subsection 1. Next, what is the time limit for reassessment proceedings under 147? Earlier time limit was what? From 1 year from the end of financial year in which the notice for reassessment was served. 1 year from the end of financial year. Now the time limit is again reduced by 3 months. It is 9 months from the end of financial year in which notice under reassessment was served. So 12 months has become 9 months. 2 years are now become 21 months. Similarly, order of fresh assessment as a result of an order 254, 263, 264 setting aside or cancelling an assessment, that 1 year from the end of financial year, now it is 9 months from the end of financial year. Next, an order making effect otherwise than making a fresh assessment, no time limit was prescribed. Now it says 3 months from the end of the month. Now, one more new amendment, welcome amendment has come. What is it? Suppose you have won the case in CAT appeals or you won the case in tribunal. So armed with a copy of the appellate order, you approach the assessing officer, sir, kindly give effect to this appellate order and issue the refund. So just keep quiet. You file a letter in the tapa along with a copy of order and keep quiet. Within 3 months from the end of the month in which you have filed the letter for order giving effect, if the assessing officer does not pass the order issuing the refund, interest at 6% will get enhanced to 9% and assessing officer shall be held accountable. So 6% interest you are getting on refund. So don't bother. You file immediately order comes. Now you will have to give effect to the appellate order. You just file letter, attach copy of order, kindly give effect to the appellate order, issue refund, file it in the tapa, go after 3 months, get interest at 9%. So that is why now they are giving effect to all the appellate orders. For example, CAT appellate order, or tribunal, or high court.
Now they are telling if you go to high court, they will tell they go to AC.
Yes, sir.
We do not know who is the assessing officer now.
No, I think that you can find out now. Online jurisdiction you can come to know.
So this is available.
And based on the quantum of your income also, you can know whether it's ITO or assessing officer. You file 2 letters and attach 2 copies of order. No, even with ITO file, I file with ACAT also. What for us? It will help us. You just take chapa on the letter. You just file it in tapa and go home. And go after 3 months. Now this advance tax payments, it is 4 installments. Will be paid in 4 installments of 15%, 45%, 75%, 100%. Even 4480 cases are covered now, but only 1 installment 15th of March. Now 244A, one more important thing is telling. Suppose I file the return today. Now individual, you are going to file the return tomorrow. Tomorrow you are filing the 1st of December, you file the return. Earlier, when was 244 interest allowable, sir? From 1st of the assessment year. From 1st of the assessment year till the date of granting of refund. Agreed? 1st of the assessment year till date of granting of refund. Now if I file return of income tomorrow, assessment year 16-17, I am filing return on 1st of December, no interest from 1st April till 30th of November now. There is an amendment. I am not going to give refund interest. For the period of delay voluntarily made by the assessee. That is a new amendment. Now I am not going to give 1 pi interest, government says. You never file the return within time, 31st of July or 30th September or 31st October as the case may be. You are filing tomorrow, fine. I will give you from the date of filing return till the date of grant of refund. I am applicable is this. I am applicable to give, henceforth I will give refund only from the date of filing return till the date of grant of refund. For the period from 1st of April till the date of filing return, I will not give 1 rupee of Yeah. So this was recommended by Justice R. V. Ishwar, which the Finance Minister accepted. Additional interest of 3%, that is 6 plus 3, 9% now, would be payable where the refund arises on account of appeal effect and there is a delay in passing of order giving effect to an order beyond 3 months or beyond the period of extension granted by Commissioner or Principal Commissioner. In all such cases, interest should be payable for the period from the date following the date of expiry of 3 months or extended period. That's why it will go after 3 months, as the case may be, to the date on which refund is granted. This is in line with recommendation number 20 of Part 1 of Justice R. V. Ishwar Committee. Now we have to quickly go to the other amendments, basically penalty amendments, and yesterday's, the new amendment, what has come yesterday. So what about your penalty provisions now? So you have to be very careful now. You are filing the return today for assessment year 16-17. So this case will be taken up for scrutiny by issue of notice under 143(2), and then after 2 years order will be passed. What is the time limit for passing of order? Same thing, 21 months from the end of assessment year in which income was first assessable. For assessment year 16-17, time limit for passing order is 31st of December 2000 and assessment year 16-17. Time limit for scrutiny assessment is what is the time limit? 21 months from the end of assessment year means 31st December 2019. Fine. During the course of assessment proceedings, if any additions are made in the order passed for assessment year 16-17, penalty applicable is 271(1)(c) or 270 capital A. What to do, sir? You have to plan it out right now before entering for assessment for 16-17. Is 270 applicable or 271(1)(c) 100% to 300% of tax ought to be evaded, or underreporting and misreporting as a consequence of underreporting? 50% on underreporting, 200% on misreporting, no discretion to the assessing officer. Whereas there is discretion in the hands of assessing officer to what? To reduce the penalty on underreporting, but no discretion available for assessing officer to waive off the penalty of 200%. So what is applicable for assessment at 16-17? Is it 271(c)? Pardon, sir? Or 270A? 270A? 271(c). You are filing return for 16-17. Now, what is the law of penalty?
271(1)(c).
271(1)(c) will apply, sir, for assessment year 16-17. Fine. The law prevailing for the penalty is as held in 3 Supreme Court judgments. I will give you the citation. Is the penalty law prevailing on the date of filing return of income. So today, what is the law prevailing is 271(1)(c). 100% to 300% of tax ought to be evaded. Whereas 270 capital A is applicable for all returns filed after from assessment year 17-18 onwards. Now if you see this, what is the Finance Minister says in his speech at para 166, levy of heavy penalty for concealment of income has over the years resulted in large number of disputes despite a number of decisions of apex court on the interpretation of statutory provisions and principles guiding imposition of penalty. Don't talk about old case laws. When you enter the new regime, you can't continue to talk about the old case laws. You have a discussion on the old case laws. Precisely for this reason, Finance Minister is telling, I will wipe out all the judgments in one stroke of change In one stroke of change of the section itself, all the case laws have been made non-applicable. Someone has to fight it out again. You'll have to again go to CID appeals, go to tribunal, go to High Court and go to Supreme Court and get a fresh set of judgments under 278. At present, the income tax officer has discretion to levy penalty at the rate of 100% to 300% of tax sought to be evaded. I propose to modify the entire scheme of penalty. This is what the FM is telling. By providing different categories of misdemeanor with graded penalty and thereby substantially reducing discretionary powers of the officers itself. The penalty rates will now be 50% of tax in case of underreporting and 200% of tax where there is misreporting of facts. Exactly, my dear friends, you have to be careful from 1st of April 2017 when you start filing the return for assessment year 17-18. In the return of income, there should be no underreporting, there should be no misreporting. If there is underreporting, you have a good chance because the discretion is there on part of the assessing officer. So, subject to fulfillment of the condition, that is, you have failed the tax, you have not filed an appeal against the order, you will come out of penalty on underreporting. But if there is misreporting, there are 6 circumstances of misreporting. Where does misreporting start? Where does underreporting start? Precisely in the return of income. So return of income has to be carefully filed. Also you have got an option. Belated return also can be revised. So don't worry. Anyway you will file the return of income. You don't file the return of income in time. You file a belated return. Even in a belated return if there is misreporting or underreporting, you can very well revise the belated return. So take care of the opportunity because if it is a misreporting, then there is no discretion on the part of assessing officer to reduce or waive the penalty 200% sir, of the tax. You will have to pay penalty. Anyway, you will be filing an appeal because 246 capital A is clear. It will not say 270 or 270A. It says chapter 21. Chapter 21 is what? Head for all the penalties. So you can file an appeal. You can file an appeal. Again, pay 15% of the penalty. You pay 15% of the penalty and then based on the circular you can take a stay in the disposal of appeal. So this is what is happening. So be careful. Then what it says, penalty rates will now be 50% of tax in case of underreporting of income and 200% of tax where there is misreporting of 200% of tax where there is misreporting of facts. Remission of penalty is also proposed in certain circumstances. We'll have to see those circumstances also. Remission of penalty is also proposed in certain circumstances where taxes are paid and appeal is not filed. But that remission is only in case of underreporting, not in case of misreporting. So before filing the return of income, know what are the 6 cases of misreporting. Straight away we go there now. Now, 270A as inserted by Finance Act 2016 effective from 1st April 2017. What it says now? 271 subsection 7 there is an amendment. The provisions of this section, meaning to say 270 capital A, shall not apply to and in relation, that is 271C, shall not apply to and in relation to any assessment for any assessment year commencing on or after 1st day of April 2017. Meaning to say 271C will not apply from 1st of April 2017 onwards. You bid goodbye, it is mentioned in 271(7), clearly it is given. Sunset clause. This is what I told you, the 3 Supreme Court judgments. Law relating to levy of penalty undergoes change from time to time. The law that needs to be applied for levying penalty on concealment shall be the law prevailing on the date of filing the return. Shall be the law prevailing on the date of filing the return. Okay? So the question is, the law that needs to be applied for levying penalty on concealment shall be the law prevailing on date of filing the return, whether original or revised, which contain the alleged concealment or misstatement and not the date of initiation of penalty proceedings. So this, the Supreme Courts, they have all 3 given the same judgment. Next, sunset clause, okay. Now, reason for such amendment as per memorandum, analysis, okay. Now, 270A1, who can levy penalty? 270A1, he says, assessing officer. Commissioner appeals also can levy penalty. Why? The commissioner appeals has the power of, what are the powers of the commissioner appeals? The CID appeals has the power to confirm the assessment, enhance the assessment, annul the assessment, or reduce the assessment. It can either confirm, enhance, reduce, or annul the assessment. So when he enhances the assessment, obviously the CID appeals has the power also to levy penalty also. The CID appeals has no power to set aside the assessment. The which power has been withdrawn by the statute from 1st of June 2001. The CID appeals cannot set aside the assessment anymore now. ITD has got the power. So who can levy penalty? The assessing officer, commissioner appeals, or the principal commissioner or commissioner may direct that any person who has underreported his income shall be liable to pay penalty in addition to tax if any on the underreported income. So no problem, sir. The word used is may and not shall. No problem. We are happy. So penalty is not mandatory in case of underreporting. May direct that any person who has underreported his income. Absolutely, we are happy, no problem. He shall be liable to pay penalty in addition to tax if any on the underreported income. Next, what is the penalty? 270A7, this is only for underreporting, I am telling you. Penalty referred to in subsection 1 shall be sum equal to 50% of amount of tax payable on underreported income. 50% of tax payable on underreported income. Next, 270A10. How to calculate tax payable? You are thinking it's an easy job. There are a few examples also. What was given, I am telling you again, be careful. What was given in the budget and after the Finance Act has been implemented, total change, sir. It is not the flat rate of 30%. Whatever examples are given in your budget book, don't read that. It has fully changed now. What examples of underreporting, misreporting is given in the budget copy, don't even look at it, sir. There is full change. By the time the bill has become an act, there is implementation. Entire examples or entire, the scope of penalty has undergone a sea change. Now different way you have to calculate. It is not the way mentioned in the budget book. So the tax payable in respect of underreported income, we'll see one or two examples are there. The tax payable in respect of underreported income shall be, if no return has been furnished and income has been assessed for the first time, amount of tax calculated on the underreported income as increased by maximum amount not chargeable to tax as if it were total income. Then if the total income determined under clause A of subsection 1 of 143 or assessed, reassessed or recomputed in the preceding order is a loss, amount of tax calculated on the underreported income as if it were total income. So we will see this how to calculate now. This is easier said than done how to calculate. First of all, how do you calculate whether there is misreported income or underreported income? You have filed the return of income, declaring income of 3 lakhs. Intimation was passed. Income became 5 lakhs. I filed the return declaring 3 lakhs income. Intimation is passed, my income became 5 lakhs. Thereafter my case was taken up for assessment. Scrutiny order is passed under 143.3. Some travelling expenses disallowed. Sundry business expenses disallowed. Some commission expenses disallowed. 3 lakhs, 5 lakhs, now income assessed is 6 lakh 50,000. 143.3 income assessed is 6 lakh 50,000. Then because of reason to believe, recording the reasons, section 147 income escaping assessment, 148 up to 4 years, beyond 4 years, up to 6 years. Income escaping assessment, order is passed under 147, 6 lakh 50 income became 8 lakhs. So 3 lakhs, then 5 lakhs, then 6 lakh 50, now 147, 8 lakhs. Again, my income at Mysore escaped assessment. Assessing officer came to know that I had a business at Mysore, I did not offer it to tax. He came to know, again, reasons recorded, reason to believe, reason recorded, 148 notice issued, up to 4 years, within 4 years, beyond 4 years, up to 6 years. Second order is passed under 147, it became 10 lakhs. So, meaning to say is, from the return till the processed return to intimation, there is no question of any concealment, don't worry. 3 lakhs became 5 lakhs, no penalty. Return to intimation, 3 lakhs became 5 lakhs, there is no underreporting, no misreporting. No problem, sir. From intimation 3 lakhs to the order, first order, that is 5 lakhs to 6 lakh 50, 143.3, there is a question of underreporting. Even if there is underreporting, you have to very, very carefully, discuss with the officer and see to it that the penalty is initiated only for underreporting. If he initiates the penalty for misreporting, there is no discretion available with the assessing officer. So in the assessment itself, you have to take care, sir, you have to see that the penalty, if any, First of all, you have to see that there is no penalty initiated. If the penalty is initiated for the additions made in the order, it should be for under-reporting and not for misreporting. So anyway, from 143.3 till the intimation to 143.3, there is a case of under-reporting. Definitely penalty will be initiated. So under-reporting is there and misreporting as a consequence of under-reporting. Similarly, from 143.3 order to the first assessment, to the first reassessment order 147, how much of 6,50,000 to 8 lakhs? There is again under-reporting. Again you have to pay penalty. Again from the first 147 order to the second 147 order, 8,50,000 has become 10 lakhs. Again there is under-reporting. It may be as a consequence of misreporting. We have to see that carefully. Moment it becomes misreporting, no discretion on the part of assessing officer to reduce the or waive the penalty. Now quickly we will see what is misreporting now. Example also are given. This will be uploaded on the net also, don't worry. All examples are given latest. Now quickly we will see what is misreporting now. Yeah. If you take subsection 9, what are the 6 instances of misreporting? Kindly understand, very important for you. Before filing the return of income, you should know what is misreporting. First one is what? Misrepresentation or suppression of facts. Failure to record investment in books of account. Claim of expenditure not substantiated by any evidence. Recording of any false entry in the books of account. Failure to record any receipt in books of account having a bearing on total income. And failure to report either any domestic transaction or international transaction, to which provisions of chapter 10 apply. These are the 6 cases of misreporting. What is misrepresentation, suppression of facts, sir? Very difficult, it is not defined in the act at all. Take a host of dictionaries, litigation begins here. For anything and everything assessing officer written this misrepresentation, suppression of facts. Failure to record investments in books of account, understandable. 69A, 69 is there. 68 cash credit, 68 unexplained investment, 69A unexplained money, bullion, etc. Then 69B is partly disclosed investments, 69C is unexplained expenditure, 69D is amount borrowed or repaid otherwise than by Undia, etc. So failure to record investments in books of account is a case of misreporting, sir. It will involve 200% of penalty. Misrepresentation, suppression of facts, very very difficult to argue, fertile area for litigation again. Claim of expenditure not substantiated by any evidence, beautiful. Word use is any. I have claimed 1 lakh travelling expenses. I have got bills, he will tell you substantiate. Simple example of travelling expenses, he will tell you substantiate. So I get the bills for 80,000. Any evidence, any, not all. Claim of expenditure not substantiated by any evidence. I am giving any evidence. I am giving bills for 80,000 for 1 lakh. He can't. I can come out of that. Misreporting. Recording of false entry in the books of account. See that, misreporting. Recording of false entry in books of account. Then failure to record any receipt in books of account having a bearing on total income. So you may fail to record an entry which does not have a bearing on total income. It does not have a bearing on total income. You forgot to record, you received 1 crore dividend from Infosys. You did not fill up the return of income, fine. Section 139(6) and 6A, it talks about prescribed particulars. You have to fill up all the exempt income details, etc. 139(6) and 6A. I forgot to fill up, I didn't fill up. He is invested in what? Failure to record investments in books. Shares have you shown? You will tell, have you shown the shares of Infosys? I am not worried about dividend because it does not have a bearing on total income. I am worried about the shares. Have you disclosed the shares? Next, last one is, even that international transaction or domestic transaction, specified domestic transaction, if you fail to report, then also it becomes a case of misreporting. This is, the tax of under-reporting, what we discussed. Now, immunity, 270AA. When can you get immunity from penalty? An assessee may make an application to the assessing officer to grant immunity from imposition of penalty under section 270A and initiation of proceedings under 276C or 276CC prosecution if he fulfills the following conditions. First of all, tax and interest payable as per order of assessment or reassessment under subsection 3 of 143(3) or 147, as the case may be, has been paid within the period specified in notice of demand. Sir, 156 notice of demand is set along with order. What is the time limit? 30 days. Within 30 days you have paid the demand, no penalty. Then no appeal has been preferred against the said order. Your 143(3) order or 144 or 147 or whatever, order is received and you have not appealed against the order and you have paid the tax, then penalty will be drawn. And you have to make an application. There is a new form has come now. An application referred to in subsection 1 shall be made within 1 month from the end of the month in which the order referred to in clause A of subsection 1 has been received, and shall be made in such form and verified in such manner as may be prescribed. After paying the tax, you will have to fill up. So all these are there, time limits, etc. This is the form, yeah. Assessment here, section under which order is passed, date of reassessment, date of service, amount of income assessed, tax and interest payable as per notice of demand, due date for payment, details of amount paid, that's all. Form of verification. So various issues are there, we will not go into it. Various issues will be there, just to because it's a new amendment now. So before filing the return, I wanted you to be aware of what constitutes under-reporting, what constitutes misreporting. Now quickly we will go into this amendment which has come yesterday. Some time to discuss that also. So what happened now yesterday, sir? Now for those people who have declared under 115, now when is this new section applicable? Taxation and investment regime for Pradhan Mantri Garib Kalyan Yojana 2016. Within 20 minutes it has been passed by the Lok Sabha now. The amendment bill was passed within 20 minutes. I want huge uproar. Now we will quickly go through the provisions. Applicable for undisclosed income in the form of cash or deposits held in bank accounts or post office, 199C. This is not under Income Tax Act, sir. This is there in separate chapter in Finance Act. So it is applicable for all undisclosed income in the form of cash or deposits. He is bringing one more amnesty scheme. Post IDS, he is telling, I am bringing you one more amnesty scheme. This is the last amnesty scheme. You didn't want to declare IDS, no problem. You can come clean again, pay the tax under this scheme. So what are the salient features? We'll just go through that. Either in the form of cash or deposits held in bank or post office. What is the quantum of tax? Pay income tax at 30%, surcharge of 33%. How to calculate surcharge? 33% on 30%. That is 1/3, that is 10%. So 30 is the tax, 10% is the surcharge, it became 40%, plus penalty is how much? 10%. So 30 plus 10 plus 10, 50%, absolutely no doubt in that. First 30% tax, on that you calculate 33% surcharge, that is 1/3. That became 30 plus 10, 10% surcharge and 10% outright penalty. So 50% is the total tax to be paid under this scheme. 199D and 199E. The declarant shall deposit minimum 25% of cash in a deposit scheme to be notified by central government in consultation with RBI. Now you have utilized this scheme, 50% of the tax, surcharge, penalty you have paid to the Prime Minister. Out of the balance 50%, he says 25% you deposit in a notified scheme. You will have to, now it is going to be notified now. You deposit in a bond for 4 years locking period, no interest will be given. After 4 years, yes, you can use that black money. Immediately you can use 25% of your black money. You have declared now, you have paid 50% of black money as a tax. I am allowing you to use 25% of your black money immediately. 25% of the black money you have to deposit in a fund to be specified, to be notified by central government in consultation with RBI section 199F, but I am not going to pay you a single penny. For 4 years there is a lock-in period. The deposit shall be interest free and shall have lock-in period of 4 years, no problem. Next, that means how much you are paying, sir? 50% plus 25%, 75%. At first itself, you are paying 50% plus 75%. Now ideas time is given for at least next year time is there. 1 year time you give. Whereas for this one, what is the time? Up to 31st of March. Even before you file the declaration, you will have to pay the tax and then file the declaration. The deposit shall be interest free and shall have locking period of 4 years. Income tax plus surcharge plus penalty plus deposit is 75%, has to be paid to the treasury before making the declaration, and proof for payment is to be attached with the declaration. Absolutely simple, there is no doubt about it. 30% tax, 33% surcharge on the tax. That is 1/3 of 30% is 10, and 10% flat penalty. 50% is the tax, surcharge, penalty to be paid to the government. 25% thereafter to be deposited with the government in a fund. Deposit interest free, lock-in period 4 years. So 75% will vest to the government. Balance 25% you can make use of it to pay your advance tax. Next, the total amount of undisclosed income shall not be included in the total income of any assessment year of the declarant. Undisclosed income may have been earned at any time before 1st of April 2017. The declaration made under the scheme shall not be admissible in evidence against the declarant for purpose of any proceeding under the Act except those mentioned in the same thing: narcotic, drugs and psychotropic substances, unlawful activities, Prevention of Corruption Act, Prevention of Benami Act and Prevention of Money Laundering Act.
This point number 7.
Pardon, sir?
Point number 7.
Yeah. Undisclosed income may have been earned at any time before 1st April 2017. Same thing like your ideas, you know. You may have earned any period, now he is giving one more scheme. Now you come clean again. All your unaccounted cash deposits in bank, basically because of this demonetization, because of unscrupulous people who have been using various modes and means to convert. Therefore, he has brought in this harsh provision straight away from 1st of April 2017 itself. For what? For financial year 16-17. The problem is this provision is applicable for financial year 16-17 now. From 1st of April 2016, whatever deposits in bank, unaccounted deposits for which you have no source to offer, shall use my scheme. Pay 50%. We'll see how it develops further. If a declaration has been made by misrepresentation or suppression of facts, or without payment of 75% of cash as per scheme, such a declaration shall be void and shall be deemed never to have been made under this scheme. Today is the last date for that first installment of ideas. If you have not paid today, the scheme, you will be null and void under the scheme. Proceedings under the Income Tax Act will come into play. Proceedings under the Income Tax Act will come into play. Next, if a person fails to make a declaration as per above scheme, but file IT return for assessment year 17-18 now, declaring any unexplained income, investment, cash rate, etc. under 6 sections, 68, 69, 69A, B, C, D. Now people will tell, I will not declare under this, I will declare under normal income, in the return of income for 17-18. He shall be liable to pay income tax at 60% of such unexplained income. But if the same is not included in IT return, then additional penalty under 271 ASC at 10% of tax is available, leviable. So that means you can declare in your return of income, absolutely no problem. You want to declare, you don't want to go in the Pradhan Mantri scheme, no problem. Declare in the return of income, pay straight away tax at 60%. Straight away tax at 60%. And penalty is also there. If the department catches you, you will have to cough a penalty also. Same is not included in the IT return. Additional penalty under 271 ASC at 10% of tax payable is leviable. What is the tax payable? 60%. What is 10% of tax payable? 6%. Therefore, totally 75 plus 6, 81% if the department catches you. If the department catches you, 81%. If I have to pay this, 75%. Yeah, you see this unaccounted cash deposit black money. You have not opted for this scheme. First on the right hand side, you have not opted for this scheme. So you are declaring now, self-declaration. Pay tax on 115 BBE at 60% on such money. Pay surcharge at 25% of tax, that is 15%. Declare and file return. How much are 25% of tax? 60%? 15. So total 75% you have to pay tax. 115 BBE today, if you want to pay tax, in the return of income, 75% you shall pay. If the department catches you, same thing sir, 75% plus 10% penalty under newly introduced provision 271 AAC, 10% penalty of tax payable. Tax payable is 60%, 10% of tax payable is 6%, penalty is 6% plus 75, 81% if the department catches you. If you file return, 75%. Next, now you don't want these two. Now you want to opt for this. Opted for scheme Pradhan Mantri Garib Kalyan Yojana. Pay tax at 30% only.
Basic limit, 1,50.
Pardon sir?
On tax allowed, sir.
Yeah, please take.
When you explain the tax payable, 30% plus 33% surcharge, 10% penalty.
Correct.
That 10% was directly on the tax. That is how it came to 49.9.
No, 49.9 is your 50% only.
What I'm trying to say is, you understand, you said 30% of tax.
Correct.
Plus 33% surcharge.
Correct.
10%.
Correct.
Equal to 40.
Yeah.
Another 10%
Penalty,
penalty.
flat.
That is 49.9.
Yeah.
That means 10% of the tax area.
Correct.
Okay. But here you are telling 6% or 60%. It is 10% of the tax taken away. So it will be.
No. That's 60%. Wait, sir.
It is last one 10% penalty.
Sir, once again, that 50% is under Pradhan Mantri Garib Kalyan.
No, I'm
Don't
not
confuse it.
saying that.
Yeah.
See, you go back there and see your code.
Yeah.
30% penalty plus 33% surcharge plus 10% penalty.
Correct.
Okay. 40 plus 10 50. That means 10% on the tax rate away. Okay. That is why 49.9.
No.
It is not. See, it is not 3% of that 30%. See, on tax, it is not penalty on the tax of 30%.
No, what you want to tell me no.
What I am trying to say is that last explanation you have given is not adequate. This one is.
No, it is 49.90 or 50. My view is 50% only.
No, see, 10% penalty is not on the 30%.
No, sir, 10% penalty is flat. It's not on 10% on the
Similarly, the same words goes in the last one. 10% on the flat, not on 60%.
So how much is your view now? How much will it become?
60 plus 25% on 50%.
Yeah.
That is again 50% plus 10% flat. So that makes up to 85%.
So your view is 85%.
Yes.
Anyway, I stick to my view of 81%. That is a case to be discussed outside. I stick to my view is 81% now.
Okay.
Fine. Your view is 85, my view is 81%.
Okay.
I am not inclined to change my view. Fine.
What about basic?
Not available, sir. This flat rate. No basic rejection limit available. It's a flat rate. So now be very careful. Now you see we have three schemes. Now you understand carefully. First I am telling you have not opted for the scheme. So self-declaration, I am not opting for that Pradhan Mantri scheme. I am declaring my return of income 115 BB. When I declare here, straight away 60% is the tax, 25% is surcharge. Okay, that is 25% of 60 is 15%, 75% is the tax I have to pay. No problem, sir. If the government catches me, anyway I have to pay 75% plus, as he rightly says, penalty at 10%. So his view is 85, my view is 81%. We'll have to pay 81% if the government catches me. Now, a person takes shelter under this scheme, Pradhan Mantri Garib Kalyan Yojana, PMGKY scheme. Then what is the tax? 30% is the tax, sir. Penalty is 10% on such money. Then pay 33% surcharge on tax. Deposit 25% of such money. All said and done, 50% will go away. Balance 25% will stay with you, and balance 25% will also come back. If you avail this scheme now, 50% only will go to the government's kitty. 50% will stay with you, and with 25% will go and will come back after 4 years with no interest. But you can save 50% then. If you avail of this scheme, it is similar to your IDS. Now, step by step is telling you have not declared IDS, so I cannot, do injustice to the declarants under IDS. I am going to give you one more scheme. One more scheme by increasing 5%. That is the cost of your recalcitrance. You did not declare an IDS, so I am giving you cost now. Again 5%. So 50% you pay.
Sir,
Yes, sir.
sir, it is only for November, December or up to April to December.
Which one, sir?
This tax.
Sir, it says applicable from 1st of April 2017, assessment year, 17-18 onwards. So it is from 1st of April 2016 till March 2017. It only says applicable from 17-18 onwards, meaning to say financial year 16-17. Sir, whole issue is now, what is the question? Very, very relevant question. What he says, 3 days before there was no such scheme, his assessee went to bank and deposited 1 crore and paid 35% tax, 115 BB. Post demonetization, his assessee went to bank, deposited 1 crore rupees old notes for which he did not have source, and he paid 35% tax, invoking that 115 BPA, 68 or 69 or whatever. So the question is, what is asking, very relevant question, he is telling now, I have to pay tax at 75% or 35%. Have you understood the question, sir? Very, very relevant question. He says, my assessee, sir, 3 days back this section was not there, rather this amendment was not there, section was always there. My assessee went to bank, 1 crore rupees unaccounted cash deposit, black money he deposited in bank, immediately deposited, he cut out the check in favor of RBI, immediately 35% I paid tax, sir. 30% plus education cess and plus surcharge. 34%, if you have 115 GBA, Federal Section 68, I paid the tax. Is penalty leviable at 200% under 200A? Is first question. And second question is, will I be able to, should I have to pay 75%? Is it misrepresentation or suppression? Will department now tell me that you have suppressed or misrepresentation? There is no misrepresentation, suppression of tax. Income is not suppressed. Tax is paid at a lower rate. Tax are paid at 35%. So income have I suppressed? No. 1 crore I wanted to declare, even now I declare 1 crore only. Only tax I should have paid at 75%, I paid at 35%. So what is your view now?
Tax applicable at that time was 35% only.
So he is telling you, at that time tax applicable was 35%. Why should I pay 75%? That is one view. Very dangerous provision, sir. Those people are deposited. But this section does not say, post demonetization, post November 8th. It only says applicable from 1st of April 2017, meaning to say applicable from financial year 16-17. Pardon, sir? What to do?
Make them to deposit now.
Make them to deposit balance 40%, he says. Go to Supreme Court. Fertile area for litigation. Yes. He is again bringing different views. He is telling in middle of the year you have brought in amendment. You have passed amendments. Law is crystal clear, sir. There is no confusion in the law. Clearly says applicable from 17-18 onwards. Meaning to say financial year 16-17 onwards. Department will definitely take the view you will have to pay tax at 75% and not 35%. So as he is telling, we are going to go to the courts. Yes, sir? He is telling now proportionately for half year. Now this illustration I am giving you about this Pradhan Mantri Garib Yojana scheme, 10 lakh rupees of what? Undisclosed cash deposit. So out of 10 lakh rupees, 25% you deposit in your scheme 2,50,000. Balance is available for payment of penal tax and for you 7.5 lakhs. Out of that 30% tax, which is 3 lakhs. Pradhan Mantri Kalyan says 33% again 1 lakh. Again penalty 1 lakh. Penal tax is 5 lakhs. Balance available for immediate use is 2,50,000. 2,50,000 you will get after 4 years. By that time, if he is in office and one more scheme you would have, brought in. That is what we discussed that already. Pardon?
That means this scheme will be there for next 3 months.
Pardon, sir?
This scheme is applicable for next 3 months, up to March.
Understood.
Now what is to be done, you tell me now.
He is
telling I will go, that's fine. He is telling I will go to Supreme Court. You are on 2 counts. What he says is, first of all, you are bringing a new law in between of the year. Secondly, you are telling me to do something I can't have done. That when the time I declared 1 crore rupees, I paid 35% tax. 115 BB was there, I paid tax. 35% I complied with the existing provision of law. Today, you are coming today and telling me to comply with what I had done yesterday when there was no law prevailing. That is the ground he is taking. Pardon, sir? Retrospective amendment, whatever. But law is clear. 1st of April 2017 it is. There is no confusion with the law. Post demonetization, he did not say this law is applicable for deposits post 8th November. He only says 1st of April 2017 onwards, effective from assessment year 17-18 onwards. That is the whole problem there. Again, draconian provision will affect lot of the people. Lot of them will get affected.
So all taxes applicable should be paid in one installment?
Pardon, sir? Yes, before filing the declaration, you should pay the full tax. That's what it is. You pay full tax. Pardon, sir? Yes, sir?
This is not included in any of the government
Very clear.
Pardon?
Steve said,
Yes, sir.
this particular declaration what you made, that is the very financial,
Yeah.
will not be included, considered for any other subscription or any other. It is a corporate scheme.
Okay.
Under this we pay is 50% tax, 20% without any interest,
Correct.
25% just over.
Correct.
It can't be partial, any part of any other subscription. That's what it says.
Correct.
So you can't say next year I'm going to tax this also or you are not going to also. It cannot happen.
Fine. There is one more. Correct.
One more point here.
Yes, sir. Yes, sir.
See, the basic limit of 2 lakh we started to.
No, sir. This is a flat rate. Flat rate.
No, for the people who are deposited, only 2 lakh rupees into their accounts.
So he is raising up a question now. People who have deposited 2 lakhs in their accounts.
Say for example, small people.
So will you give 2 lakh 50,000 benefit of exemption limit? He says.
Yes.
The question is 2 lakh rupees he deposited in the account without any source.
Yes.
There is no source for that. So will the income tax department give benefit of exemption limit? Or will he levy flat rate again on the 2 lakh rupees also? There is no source, sir. Absolutely no source. Pardon, sir? No, past savings authority. You have to explain the source limit. He should agree with the source. When once he agrees with the source, then there is no question of taxing your 2 lakh rupees because it will go below 2 lakh 50,000. If you are not able to satisfactorily explain the source, then it will come under 115 BB. Because it applies only to what unaccounted bank deposits and cash. If you see here, and you see this now, even searches made post now, even he has brought in amendment in search penalty provision also. What was the erstwhile penalty provision now? 10% of income if admitted, returned and taxes are paid, 20% of income if not admitted but returned and taxes are paid, 60% of income in any other case. That was after 1st of July 2012, if any such. And now in between of the year it brings in this 30% of penalty and 60% of income in any other case. We will just go through the provision. Now I am bringing you back to circular number 25 of IDS. You know, the important question number 9 was there in IDS. What people are going to do now, they are going to declare the income. If you declare your unaccounted wealth in the regular year, what are the advantages of the scheme as against declaring the past undisclosed income as current income in the return of income to be filed for assessment year 17-18? How will the department identify the year in which the undisclosed income was earned? In this regard, following points may be noted. This is given in circular number 25, question number 9, sir. Declaration of past undisclosed income in the current year amounts to false verification of return of income, which shall attract prosecution under the Income Tax Act. If anyone attempts to disclose past undisclosed income in the current year, he will have to explain the source of income and substantiate the manner of earning the said income. In case of disclosure under the scheme, there is no need to explain the source. That is what is given in IDS. It may not be law. It is just a question and answer part of a circular. Circular is binding on the income tax officer. This is the question and answer given in case you are not able to substantiate or offer satisfactory the source and you try to declare it in the garb of regular income for assessment year 17-18. Declaration of past undisclosed income in the current year cannot explain assets acquired in the past or provide any immunity in respect of the same. Department is in receipt of large volume of information from various sources such as registrars of property, banks, financial institutions, stock exchanges, tax deductors, etc. Department has launched a program, comprehensive data mining and compliance management program in the form of Project Insight, which will generate large volume of reliable information about financial transactions undertaken by taxpayers and the relevant year in which transaction was undertaken. That there are Supreme Court judgments, all that is fine, I wrote in courts, but when you make an amendment in the law itself, the amendment would prevail over the, that is what he has done now. That is what he has done. So we'll have to wait and watch how the department uses draconian provision. For anything and everything in the course of assessment proceedings, they will tell, I take it as 68, 69, 69A, B, C, D. Moment the 6 draconian sections come into play, how to tax, 115 BBE, 75% tax, 271 ASC, 10% penalty. For anything and everything in the course of assessment from next year onwards, the income tax officer will use this weapon. For creditors, now you are not able to give confirmation from creditors, or your creditor becomes untraceable. or he does not give the information. He does not give you the confirmation. He does not reply a note. Letter has gone to the creditor on 133.6. He does not reply. If he makes an addition under any of these 6 sections, 115 BB will come into play. 75%. How the officers will misuse and will lead to more corruption. It's going to lead to more corruption. And the total misuse of the provisions by the income tax department, you wait and watch. Total misuse of the provisions.
They only told that up to 2.5 lakhs there will be no notice will be issued, sir.
No, sir. See, that statement is given by the Prime Minister. You go back and read the, listen to the YouTube, what he says. Mata, Behan or Bibi. He says in name of the ladies, you disclose 2.5 lakhs, no question will be asked. Then he says, wherever all the parents are in the old age houses, people are running behind them now. My mother, my father, come back. Deposit 2,50,000. So Modi says, so many people have come back. Karke. And in their names, if you deposit 2.5 lakhs, I am not going to question you. Fine, sir. You will not question me, fine. And where is the time for the department, to catch a person who deposits only 2 lakhs, as in a person who deposits several lakhs. Where is the time? Department is acutely understaffed. Now 1 lakh persons will be recruited by the income tax department now, precisely for these cash deposits. They are understaffed totally, severely understaffed. 75,000 to 1 lakh people will be. The question now is very wonderful question he asked now. 2 lakh rupees below exemption limit, but I can't offer source. Moment I can't offer source, assessing officer, no, everybody will know 115 BB. In some of your software guys, where you are having this, I'll not name them. CS also group of that WhatsApp group, knowledge discussion group. You have got some assistant commissioners in those group, and you are all discussing tax planning. I am totally aghast and surprised. I am not giving any of you in that group. Kindly go back and see you are part of various, WhatsApp groups. There are 10 assessing officers there, 10 CS there. And you are happily, you are giving all your views. You are all giving tax planning. And the officer is watching silently. They are part of the group. I request all the members not to stay in those groups or not to give your views, to stay in the group. You also remain a mute, silent spectator. Now these are all, the law threadbare. If you see this, the following subsection in the Income Tax Act 1961, hereinafter referred to as the Act, in 10 section 115 BB for subsection, following subsection shall be substituted with effect from when? First day of April 2017. Namely, where the income of an assessee includes any income referred to in 68, 69, 69A, B, C, D and reflected in the return of income furnished under 139. Or determined by the assessing officer includes any income, assessing officer determines the 6C. If such income is not covered under A, that means I have not reflected in my return of income. Then the income tax shall be the aggregate of, see how to calculate. Income tax payable shall be the aggregate of amount of income tax calculated on the income referred to in clause A and B at the rate of 60%. Amendment. 35% is gone, sir. Straight away it says 60%. Straight away 60%. No expenses allowed, no deduction allowed, no set off of losses allowed. And then this is a new penalty provision for 10%. Anyway, I at least had maybe 81%. 85% it comes still on a higher side. Still on a higher side. So these are all the draconian provisions, and we'll have to wait and watch. This just yesterday itself, the provisions have come. Just yesterday itself. This is the scheme of the Act. You have to be very careful now. You can't declare on your 150. Yes, sir? Sir, not article 1. Please give the mic. Tax. Yes, sir. Section 68. Yeah. Okay.
So when like somebody with some money, say cannot be explained.
Okay.
whether section 68 can be invoked because she is not eligible to maintain a books of account at all.
Yeah, that's a good question. So this 15%, sir, this taxation investment regime, in this law, it does not talk about books of account at all. What is telling? He is bringing this section precisely for unaccounted bank deposits only. Unaccounted bank deposits, he says. Precisely post demonetization, is bringing this scheme. He is not talking about books of account here at all. Normally 68, as you rightly pointed out, books of account have been maintained. That is a very good point. For this Pradhan Mantri Garib Kalyan Yojana, if you see the statement of reasons also, you will just see that it does not talk about books of account at all. You see the finance minister's, statement of objects and reasons. He says, as a step forward to curb black money, bank notes of existing series of denomination of value of 500 and 1000 rupees issued by Reserve Bank have been ceased to be legal tender with effect from 9th of November. Concerns have been raised that some of the existing provisions of the Income Tax Act could possibly be used for concealing black money. It is therefore important that the government amends the Act to plug these loopholes as early as possible so as to prevent the misuse of these provisions. Hence, the Taxation Law, Second Amendment Bill 2016 proposes to make some changes in the Act to ensure that defaulting assessees are subjected to tax at higher rate and stringent penalty provision. You see the reason why this amendment is made. Clearly says, as a step forward to curb black money, bank notes of etc. Then he says this is the concern. Then he says here, in the wake of declaring specified bank notes as not legal, there have been representations and suggestions from experts that instead of allowing people to find illegal ways of converting their black money into black again, the government should give them an opportunity to pay taxes with heavy penalty and allow them to come clean so that not only the government gets additional revenue for undertaking activities for welfare of poor, but also the remaining part of declared income legitimately comes into the formal economy. So that is how it is telling. Therefore, an alternative scheme, namely etc. etc. is telling. Then what he wants to do with that money, last 4 lines. This amount is proposed to be utilized for the programs of irrigation, housing, toilet, infrastructure, primary education, primary health, livelihood, etc. so that there is justice and equality. So this all early in the day, we don't know what is going to happen. Advocates, senior chartered accountants will argue as I rightly told, some few views. Other members also had views. They will present their own arguments, but they will have to start from scratch again now. Again, the representation has to start from scratch. The results will not be known immediately. It will be known only when the cases come up for assessment. What will be the new system of penalty? New system, new regime of 115 BB. New system of penalty 270A. New system of penalty 271 EAP. New system of penalty 271 EAC. Post search, post survey, post scrutiny. So it's all 2 years down the line. You are going to face litigations galore. Okay, anyway, thank the members and thank us for very patient with you.
I am sure all of you had a fantastic, very lively and energetic session. And let us thank the speaker for his valuable time and knowledge sharing with a round of applause. It is time to present a memento to speaker on behalf of Bangalore branch of SAISI. May I request CA Ashok Kumar to come forward and present the memento to speaker as a token of appreciation and gratitude. Friends, please stand for a round of applause. Thank you, Ashok Kumar. Let us wind up for the day. Thank you very much.